Hello and welcome to Finextra. I'm Emily Haller and I'm here with Jean Neyer of D&H. And we're at EBA Day 2016 in Milan. Thank you for joining me, Jean.
Thank you, Emily. Pleasure to be here.
What have been the key developments in instant payments in Europe in the past 12 months?
It's a great question because this is a really exciting time and an exciting topic. And there was an opportunity to go one of two ways. The Retail Payment Board has called for a pan-European solution with an idea of, we've learned a lot from SEPA, we know how things work when they're consolidated and how they work when they're fragmented. And what we see, however, in the last 12 months is that countries continue to pursue the domestic alternatives. We had an announcement literally in the last couple of days of Italy adapting a vendor for an Italian scheme. Spain has come out and said that IberiePay is going to build their scheme for Spain. France will use STET. EBA, which is a pan-European scheme, has selected SIA. And even my friends in Greece are talking about a Greek national payment scheme. So again, we are repeating some of the things that we wished we didn't have to do in SEPA. Now granted, we want to start, and we want to start as fast as possible, and sometimes the only way to do that is to let different countries take their own direct approach. And what I think will happen over the next 24 to 48 months is we're going to start looking at potentially some consolidation. We will have to look definitely at the interoperability. And really for Europe to realize the promise of a single European monetary union, we must not have the divisions that start and end at a particular country border.
So how well are banks responding to the challenges and opportunities of instant payments?
Again, it's a little bit early days because the true instant payment schemes, the way EBA would define them or the way the Retail Board will define them are not implemented yet. So we can look at the experience in other countries and see how other countries do it. And the countries don't have to be places like Singapore, which is doing very well. It could be European countries like UK, where VOCA has done a marvelous job in evangelizing real-time payments. They have now processed a little over 1 billion transactions a year. Real-time payments have reached almost 12% or over 12% of all electronic payments, which really tells you that this is a major payment instrument. It is fabulous for E&M commerce. People really are looking at using it to replace cash and checks, although that's not really that much of a driver in Europe. And we see this as an opportunity to really start giving consumers some of the wow factor. So when I talk to merchants, they say, yes, maybe I don't need to get paid right away. I can manage the float, I'm doing it today. But I'd like to give refunds right away. This is how I show my customer that I care about them. And being able to do a refund right away to a customer is something that the merchant would like to do. And this is something that the banks really need to do. The other discussion is, in many countries, request to pay, which would be sort of a direct debit light, is part of the scheme. In Europe, it has not been a formal part of the scheme, and it will be adapted as a value-added service on a one-off basis. And again, in my feeling, the only additional optional service, let's call them that way, should be use of a domestic language. Everything else, I feel this is a new scheme. It doesn't exist. And therefore, this is an opportunity to do a greenfield solution that all countries can agree on. And not make it a grand compromise, but make it something that really serves the entire Europe.
What about blockchain? How is that impacting the payments business so far, and what do you see as its potential for the future?
It's a great question. We've been speaking about blockchain now for several years. And the answer is still very relevant. As a disruptive innovation or a potential disruptive innovation, what it's forcing the banks to do is to re-examine their operation. We see SWIFT reacting, for example, to blockchain and other initiatives, so it's not just blockchain in isolation, with their GPII project, where SWIFT is using existing technologies to give a better experience for corporates, and then over time go from a same-day experience to almost a real-time experience. We see banks re-examining their operational procedures in a variety of verticals. Payments were the initial ones, but then it moved into capital markets, it moved into trade settlement, and the promise of blockchain, which is it's global. The data is universally accessible. The data is trusted once it is in the blockchain. Those opportunities is what's driving banks to potentially think about how they're going to offer new services. What we see is two potential opportunities. One is tactical. So blockchain will be used to make the existing operations of the bank more efficient, drive down the costs, improve the timing, and examples of that might be cross-border remittances built on top of the blockchain, or NASDAQ building a new exchange on top of the blockchain. So using blockchain as an infrastructure component on top of which we build traditional business services, which are now cheaper, faster, better. That would be one. The other would be transformative, which is go into the businesses that banks have not been in, or add aspects to the business that the banks have not really engaged in. An example might be today, if I want to go and factor an invoice, get financing on the invoice, if I'm a bad guy, I can go to 5 banks down the street, get the same invoices financed, and they will only find out about it if I go bankrupt. Now, in the future, you can build a clearinghouse on the blockchain where the information about the invoice, not the invoice itself, because that's private, will be stored. And then banks will be able to go to that clearinghouse and say, has this invoice already been presented for factoring? And in that case, pass on the opportunity. So those are some of the discussions that we've been having. Trade finance is wonderful because, wonderful use case, because it is very paper intensive, it has lots of different parties, and because in some way it aligns with an Internet of Things. So as goods and services move through a physical chain, containers moving into ports, and there is a digital chain with bills of lading, and shippers, port officials, bankers are all working together. Today, it's pieces of paper moving all over the place. Tomorrow, it is potentially everything digitized on a blockchain, plugged both into the Internet of Money and Internet of Things coming together. So those are the major opportunities. This said, this area is very much in flux. The technology is constantly being changed. The business model are constantly evolving. So I would say that we should be looking at the next several years as a period of both furious innovation and emergence of lead actors. And it is at that point that we're going to start moving into the major production implementations.
Gene, thank you very much.
It's my pleasure.
And thank you for watching.